Hello there. Good morning. Welcome to another edition of Knox to Nuggets. My name is Oluwayomi Ute, and it's such a joy to come your way this beautiful Monday morning. How has your weekend been? I trust God it was restful and that you're ready for a glorious working week. And I pray that this week will deliver to you in every single area that you so desire. So, this morning, still continuing on our Building a Legacy series, I have with me a graduate of accounting from one of the leading universities in Nigeria. In her graduating year, she won the AfriBank Award for the best graduating student in a finance related discipline. She's a chartered accountant, a chartered stockbroker, and a CFA chartered holder. She was a CEO of a leading stockbroking company here in Nigeria, where she was responsible for the leadership and strategic development of the company, championing market initiatives and ensuring the retention of the company's market leadership position. Currently, she's executive director in charge of business development in a leading financial institution. Without any iota of doubt, she is qualified to give us insight into paper assets and their reliability as a means of generating passive income in our world today. Ladies and gentlemen, with me in the house today is no other. So please receive her with me, Titi Ogungbesan. Hey, good morning, Titi. You're welcome.
Good morning, Ma. Thank you for having me this morning.
I should thank you so much for taking out time to be with me today. I know your schedule, and I'm so glad that you could make it. And because I know everybody here wants to know so much about paper assets, let me just throw it at you immediately. What exactly are paper assets?
Okay, so paper assets basically, like the name implies, like paper that represents some form of value. So it's basically a representation of ownership of an asset, which is depicted by a paper. But what you find
Mm,
out these days is that we know we're moving from the paper era to an era where most of these things are going electronic. I mean, so in the past, certificates were issued for shares, for bonds, and for some other financial assets. But now you have most of them are electronic driven. So, for instance, you have the CSCS, which is linked to the Nigerian Stock Exchange,
yeah.
which warehouses shares in electronic form. So, unlike those days where you buy shares in IPO and you get certificates, now most times it's already domiciled in the CSCS account. So you don't get physical paper certificates again, but they depict ownership of financial assets. Thank you.
Wow. So paper asset depict ownership of financial assets. Now, you see, Titi, when we're talking about paper assets, we're talking about how to generate passive income. And one of my dear friends, when he saw the flyer, was like, paper assets. I just lost millions. What are you talking about here? So talk to me. Is it still the way to go, or should we all pull our ears and look for something else to do?
Okay, so when you talk about paper assets, so you're talking about financial assets like stocks, like bonds, currencies, mutual fund, insurance contracts, money market deposits, bank deposits, and all. So it also includes your pension fund as well. So paper assets generally, I mean, it's not just one type of assets, but I mean, it's a whole lot that is embedded in the paper assets. And I think one important thing would be diversification. I mean, there's a saying that says, don't put your eggs in one basket. So if you want to invest your funds and you want to get passive income along the way, then you have to invest in various asset classes. So you have some in bonds, some in stocks, some in currency, some in mutual funds. Mutual funds are of various types. You have the dollar denominated mutual fund, you have the naira ones, you have different types of mutual funds, you have insurance contracts. I mean, at some point you're thinking, okay, I want my children's education to continue. I want them to go to this kind of school, whether I'm alive or not. We all pray to be alive, but at some
Yeah.
point things happen. And if those things happen, if you can invest in an insurance policy, even when you're no more, I mean, your children's schools can be guaranteed, and those contracts can be enforced, when you pass. Even there's some insurance you can even invest in as well, that even during your lifetime you can do some endowments, and you can fund the lifestyle you want for your children and your beneficiaries. Thank you.
Wow. So I hear you. It's not just shares, it's bonds. Some are even dollar denominated and all of that. So true. But people are still losing money, even in this paper assets. So, what do we need to look out for? So, I'm trying to prepare, I'm trying to build a legacy. What are the indices? What should I be looking out for in taking a decision to invest in paper assets?
Okay, so when you want to invest in paper assets, I mean, there are different factors you need to consider. Some are qualitative and some are quantitative. So if you're looking at investing your funds, I mean, as an individual, when you want to part away with money, you have to also be ready to spend your time, and you have to have knowledge of what you're investing in. So if you want to invest in a product, don't invest in something you do not know about. Don't
Hmm.
invest in something you have, no knowledge of. So you need to also invest. At the point of investment, you might know nothing about it, but once you're putting your money into it, you need to be interested in that, in that thing. So knowledge is very important. Whatever it says, I mean, so if you want to go to stocks, for instance, you have to look for stocks with value. I mean, you have to look at the fundamentals of the company. How has this company performed in the past? What is the P ratio? What can I get? What are you looking at? You need to first identify your investment goal. What are you trying to achieve? Are you trying to invest, to get capital appreciation? Are you trying to put this money aside so that maybe on a half yearly basis you get something in? Then you might think, okay, maybe it's bond that I should do. Every 6 months I would be getting my coupon. If you're trying to invest and say, oh, capital appreciation, there are stocks that do capital appreciation. So you look out for those kind of stocks. And then at the end of the day, the reality about stock investment is that it can be risky. And they say the higher the risk, the higher the return. So you need to consider your risk appetite. Are you able to take the risk? If you're able to take the risk, then maybe a stock is what you should go for. If you can't take the risk, you probably go for a bond or you go for treasury bills. So if you're looking, then your time horizon also is one important thing. How long are you looking at? Are you looking at a 6 months or a 1 year period or maximum of 365 days? It might be a treasury bill that you should be looking at. Are you looking long term? Then you might be talking about stocks. So it depends on, what your time horizon is, what your investment goal is, what's your risk appetite. So those are things that would determine, what you should be investing in. You also consider your stage of life. If you're somebody that is
Hmm.
very young, you're just starting your job, then you know that you still have time, to invest. I mean, so if you lose money now, you can still recoup it. So, but if you're in your 60s, I mean, taking the gamble on stock, you have to look at probably stocks that pay dividend regularly, that will provide you, the income you need, to keep on. So your stage of life or your age would also be very important in what it is that you will be doing. Corporate governance, very important. Are you looking at a company that has corporate governance? Have you looked at the track record? What's the management like? What's the track record of the board of directors of the company? Those are the things that would help you in picking what company you're supposed to invest in. And also, times and seasons would also determine. So, for instance, during COVID, I mean, many of us at some point during COVID were home, were working from home, international conferences became online, people couldn't travel, so data usage started, getting more and more. I mean, a lot of people moved to data. A lot of places you would have traveled to, you stopped it. A lot of conferences we didn't even know could hold online, started holding online. So companies that are into data definitely would be viable companies. So when you look at MTN, when you look at Excel, so those are the things you would, that would determine what companies you should be looking at, what investments you should be making, where you should be putting your money. Thank you.
Hmm. Wow. Thank you. That was so much to chew. But somebody just asked it straight. It says, which of the paper assets are secure and profitable? Because most stocks are valueless now. Are they really valueless? Some still have value, But which ones should we be looking at? Which are secure and profitable? I love those two words.
So when you talk about security, you're talking about something that, I mean, your capital will be guaranteed. And all of these things are tailored towards your risk appetite. So
Hmm.
if you don't have appetite for risk, then it's better to go into the conservative um assets. So you're talking about some mutual funds that are guaranteed investment, some mutual funds that are dollar denominated. You're talking about treasury bills that you're sure that, I mean, at maturity, you're going to get, your face value. You're talking about bonds that you're guaranteed your face value at maturity. So those are some stocks, some paper assets you should be looking at. If you know that your risk appetite is low and you don't have the aggression, to take it up. Thank you.
If your risk appetite is low, so you don't put your money and then the thing crashes and just go into coma straight and like, what happened to me? True. Well, with all that you have said, I'm just sitting down here and wondering. So I've been talking about building legacy, encouraging people to do something. Can a novice dive into paper assets? Or
And I
would you say, mm-mm, don't get somebody to help you get a stockbroker or something? What do you think?
Yeah, and I think the answer is yes. A novice can dive into paper assets. And it's just the same thing with the various aspects of life. For instance, if you have a child that is going to secondary school, you've never been there. You would do research, you will check different schools, and you will make up your mind what school you want the child to settle into. Because you're putting a lot of money into the schooling, you need to know about it. Some people go as far as checking curriculums and all of that. And it's the same thing. So as a novice, you can go into financial assets and paper assets, but you have to get the interest. The interest has to come because you are parting with money. I mean, it's your sweat and money that you're putting into in this investment. So you have to go an extra mile to understand what it is, and to know what you're putting your money to, so that you can get the pros and the cons, and you can understand the times. Also, there are times and seasons as well. So markets are in cycles, so you have to get in at the right time as well. So that's one of the things. And I hear you that, I mean, some people say, oh, I've lost money in the stock market, I've lost. But the reality is that year to date, for instance, the Nigerian Stock Exchange has returned about 15.5%. So, I mean, and the truth is, and one of my teachers said this many years ago, and I think it's really valid, that, okay, he had a friend that had an accident. And when the person had an accident, it was the same a car again that took the person to the hospital. The fact that you had an accident in a car would not mean that you won't get into a car
True,
again.
true,
So
true.
you just then have to be more conscious. You have to be more careful. You have to select your alright investments, with care. And the good thing about technology now is that on a personal basis, you can Google a lot of things,
True.
and get opportunities and get information about what the trend has been, what the future holds, and a whole lot of things that will guide you. Yeah, there are
Hmm.
stockbrokers in the market, there are professionals on the market that you can also consult aside you trying to go online and doing it. So if you have friends, if you have professionals that you have registered with, they have the duty to guide you. Their role is to direct you and ensure that, even as a novice, you get interested, and you get information, and a lot of things are information driven. So a stock is trading well in the morning, and negative information comes in, and in the afternoon you see that the direction has changed, because information is very key. So even though you know about this company, you followed it in the past and all, something new can come up and can change the direction. So that's why you have to constantly be informed. You have to get the necessary information. That's where your broker or your professional advisor will come in, because they will come in to guide you and to direct you in terms of the next steps.
Hmm.
Thank you.
Thank you. I'm going to take you to the issue of brokers now because I'm hearing something, but I want to understand what's the role of a stockbroker. Now, the novice me could think I have 100,000 to invest. I don't know what to do about it. Hey, Mr. Stockbroker, take my 100,000, go invest. and I think I'm gone to bed. But I'm hearing you saying your stockbroker will advise you. What is the role of a stock? I thought you should just take everything off and deliver to you your dividends as and when due.
Okay. Yeah, no, so basically, I think the roles can be in different forms. The major role of a stockbroker is a professional who should buy and sell shares, or assets on your behalf. It could be bonds, it could be shares, but they do that on your behalf, and it has to be with your consent. So for them to buy or sell on your behalf, you also have to consent to it. And there are arrangements where stockbrokers have asset management capacities as well. So when they have asset management capacity, the reality is that they can decide that, oh, bring this money, I would manage it on a quarterly basis, I would give you reports, and you tell you how it has behaved. So the fact that a stockbroker says, I have that asset management capacity, and then he understands you, what are you trying to achieve, and what is your risk appetite. All of those have to come in to make like an investment policy statement for you, and it's on the back of that the investment is done on your behalf. So it depends on what sort of arrangement you're going into, but a normal stockbroker is actually to buy and sell on your behalf, and any information in the market the broker provides you and tells you, oh, this is what's happening, this news just came out, this is, and if you want to buy something or sell, you're like, oh, what do you think? Do you think this is a good buy? I mean, based on the analysis of research that the broker has done, which usually share with client maybe on a daily basis, on a periodic basis, and the client can also go through it and see, what the justification is for making this asset a buy or a sell, and it's on the back of that decisions can be taken. The same way, I mean, when you think about bonds and debt instruments as well, I mean, so a lot of things come into play. Earlier in the year, rates were low. Now we have seen NPR move and increase in the last two MPC at the last two MPC meetings, and this has impacted on rates in the market. So interest rates have gone up. I mean, bonds are ticking up. Treasury bills are looking better than they were earlier in the year. So all of these things, there are a lot of factors, that come in. And when you think about bonds, when you look all over the world, you see that inflation is actually going higher, and a lot of central banks are actually, increasing rates. So the outlook for fixed income rate is like it's on the in the is on the upward trend, and is expected to go further higher than where it is now.
Hmm. That at that point you actually answered Gilbert's question that is there hope bond rates will rise again. But
The answer is yes. It's already rising, and the outlook is it looks on the upward move. Yeah.
because when you were talking about secure assets, I saw this and it's so true that treasury bill rate is far lower than inflation rate. So I put my money in treasury bill before I say Jack Robinson is eroded. So in my trying to get secure, I'm not making money. I'm actually losing money in terms of real value for money. But before I take you on, I want to just take these two comments. They both look alike from Gilbert and Ramatu. He said, sincerely, even after several years later, bank, insurance company, oil service company shares I got are worth nothing. It's like the prices were manipulated then. And Gilbert says, um, now where's Gilbert's comment on that? He said that the assets he got, the paper assets he got, they are all disappearing. He said, okay, that's it. It says, I'm not happy with all the bank stocks I bought several years ago because today they're not even worth the paper. Now, these things are the facts facing people today, and they're feeling like, look, I'm not sure I want to get involved in this. I'll take you up first with Ramato's question. Is it true that shares prices could be manipulated? If it is, how do we guard against getting into such stocks?
Okay, so I mean, the reality is that prices are determined by the forces of demand and supply. So, I mean, which means that I can't say it cannot be manipulated. It's possible based on the forces of demand and supply. So, if there's demand, excess demand, chasing limited stocks. Definitely, I mean, the prices would look higher than they should be. And that's why you have to go to do research. You have to look at trends and all of those. There are times a particular investor can just be interested in a stock and he wants to like get control of the company. So for instance, I'm looking at XYZ and I think I want to get on the board of this company or I want to acquire this particular percentage. So for me, my preference at this time is not the price. I don't care what the price is. What I want is I want those shares so that I can have controlling influence. So if that's my aim, then I will go and then the demand would sort of exceed supply. And if people in the market, the sellers say that, oh, this person is desperate to buy, they also increase their price. If I'm ready to match at those levels, I go in and I pick those shares. At that point, a novice that is coming to the market and sees that stock at that price and hasn't gone to look at what has happened will be buying at the year high or maybe 5 year high of the stock or something. And if you look at it on a valuation basis, this is why fundamentals is very important. If you look at it on a valuation basis, you probably would have seen that the target price of that stock might not be as high as what it is. So there have been different factors that have moved the price to where it was at that time. So if you probably didn't sort of do your analysis and due diligence, you'd have probably gotten in at 5 year high. For a while, it might not get there anymore.
Hmm.
Because the truth is, at different times, there are different cycles. During COVID, for instance, when we had the oil price dip and all, the market came really low. I know people that got in, I mean, 5, 10 years low on stock, and people came in. In fact, in a matter of 2, 3 weeks, at some point, I mean, those stocks doubled and tripled. So people that got in at those times would have a different story. So I think the most important thing is when you're buying shares, I mean, you could be talking about banking, insurance, oil. In all of those sectors, there are stocks that are recommended by the specialists. There are stocks that are fundamentally sound. So I think it's good at every point to focus on value. When you focus on value, I
Hmm.
mean, there might be fluctuations in the short term, but the reality is that in the long term, you will be good. I mean, so there's some stocks that would constantly pay dividend. The dividend yield is about 10 to 12 to 15%. So if you get that annually, I mean, at some point the share price will dip or go up and all, but the reality is that you're getting dividend, you're getting some compensation. Some people have seen some stocks rally for different reasons and gone in without fundamentals. At the end of the day, I mean, you probably get nothing on those stocks and it's not, you won't like the investment. So I think we all need to do our due diligence. And I know a lot of people say, oh, I don't want to get involved in stocks, I've been beaten. And yeah, there was market crash. And it's not just Nigeria. Market over the world would crash and come back. So it's just the same way. I mean, but I think the responsibility is on the individual. You're parting with money. You should be able to spend some time to look at this investment. You should be able to nurture it. You should be interested. I mean, if at the point you're going in, you're not interested, the fact that you're committing funds to this investment, you must stir up your interest. And that is very important. And the truth is, there's nothing too small to invest. Don't think what I have is
Mm-hmm.
little, and start small before you know it. I mean, and it depends on whatever investment means you're comfortable with. You have insurance contracts, you have mutual funds, you have bonds, you have stocks, you have different, you have derivatives, you have different things. I mean, you might even say, oh, derivative is high level and it's not. I mean, start with the ones you understand. That is, if the returns look too good to be true, it's probably too good to be true. Be careful. I mean, it's not a money doubling game. It's not, you can't go in there and say, I want the one that will double in 2 weeks. It doesn't work. It's possible you can get into an investment and it doubles, but the reality is that you have to be sure that the fundamentals are right. You have to understand the company. You have to look at the management. You have to look at the corporate governance. All of these are very important so that at the end of the day, it will be worthwhile. But I think one principle of investment is also the fact that you don't invest the money that you cannot afford to lose, and it's very true. So that,
Mm.
I
Mm.
mean, for health reasons and and for personal reasons as well. If you can afford to lose this money, then you might not be able to invest it. So it's one of the principles of
Hmm.
investing. Thank you.
Wow. Don't invest money that you cannot afford to lose. That is a tall order. But you're actually very true. Like, I love what Binta said here when I was saying, just give a stockbroker this account and just get off the trouble. And it's true. But some of us, so I actually have my regular 9 to 5 or 8 to 5 or 7 to 7 job. So I want to just save my money and every month give it to a stockbroker to say, look, just keep going on for me. I don't think I have the time to do all of these things you have said. Is it advisable?
Yeah, so if you don't have the time, you would have to pay the money. So when you go into asset management, like get an asset manager to manage it on your behalf and take those decisions you would have taken, then they would give you reports, whether on a quarterly basis, whether half yearly, whether on a yearly basis, and you can always look at it and see what it is. So they would have sat with you to understand what you're looking at achieving, what you can take, what your risk appetite is, what stocks you would not invest in, what bonds you would not want to get involved in. So once they understand all of this, you will pay them maybe on an annual basis, on a quarterly, depending on what you agree. And of course, those payments can be negotiated. It will be agreed ahead of time, and they will take those decisions on your behalf because they are professionals. They understand the market. They've been in the market, and they would also show you what the track records are and what they have achieved in the past. So those kind of people would be available to help and hold your hand. So you won't have to. Your money will just be going in. You'll be getting a statement that shows you what they have achieved and how they have invested the fund. And at the end of the day, it will be a win-win, but you probably will just pay an extra for it.
Hmm.
Yeah.
Wow. Okay. Somebody is asking, does cryptocurrency come into this category of investment?
The answer is yes. Cryptocurrency comes under paper assets as well.
Okay.
So, and it also goes back to what I have said. Whatever it is you're investing in, you have to understand it. So for cryptocurrency, it's high risk and the return can be high as well. So if it's high risk, then it would be more friendly to younger generations than older generations. So if you're probably in your 60s, I see no reason why you want to go into crypto, except you want to be fainting and waking up. So you need to understand your risk appetite. So cryptocurrency would be you need to understand the product. Once you understand the investment, I mean the upside can be you know, limitless. But you
Hmm.
need to understand it before you go into it. Even if you don't understand it before you go into it, at the point of going into it, you must stir up an interest in you and you must be able to do some research so that it
Hmm.
helps you and it helps your return. But of course, the higher the risk, you have to remember the higher the potential return.
Hmm. The higher the risk, the higher the return. Um, I was going to not take this, but is it true? And it's not just limited to banks. That companies that are going up on IPO can actually buy up majority of the shares before an IPO is published for buyers. Is it true?
No, I mean, so yeah, I mean, people own huge portion, yeah, people hold huge portion of companies, and yeah, the company can decide to still go on IPO to increase what is owned by the minorities or by the public, especially if the company is listed. Yes.
Mm. Wow. It says the shares of all our financial institutions have already people put people in a coma already. So we need to wake them out of the coma. Now, Titi, time is well gone, but thank you so much. It was quite informative. You said so much. One of the things that stood out for me in the things you said is the fact that you can't go into this without knowledge. And that is true for when we talked about franchise, knowledge also came into it. Every business model, knowledge is important. You can't do without knowledge. But you said identify your investment goal, the season you have in life, your risk appetite, time and seasons, and security. You've said so much on paper assets, Titi, and at the beginning you said it's advisable. So, in your pattern short, what would be your advice for those who want to build a legacy with paper assets?
Okay, so I'll say that it's possible to build a legacy with paper assets, and the reality is that it's not too late to start. You can start now, you can start small, you have to be diversified, you have to understand what it is you're investing in. And I think those are very, very important things to sort of look out for when you're thinking about investment. And it's easy to sort of move it on to your generations because they are actually intangible, but they have tangible value. So yeah,
Hmm.
it's possible.
And somebody says, how can Titi be our stockbroker?
Okay, I can be your stockbroker, and you can send an email to stockbroking
Okay.
at stambicibtc.com, and you can take it up from there. Yeah, so you would get answers to your questions. You can open a stockbroking account, and stockbroking at stambicibtc.com.
Okay.
Thank you.
Thank you so much, Titi, for your time. And thank you. It's been very informative. 31 minutes looks like it's been 3 minutes talking about this topic. And thank you because you have actually enlightened a good number of us to know that this is still a good way to go. But if you're going in, go with so much knowledge, understand what your goal is, and work towards your goal. Thank you very much, Titi. And like I will always say to all my guests that deliver so much value like you have done, I will come again. Thank you. Okay, somebody says the email again. So it's
Okay,
stockbroken.
stockbroking at stambicibtc.com.
It's stockbroken at Stanbic. So I'm just trying to type it up on for everybody at stanbicibtc.com. So I think, am I right?
Yes, that's fine.
Okay. So anybody that wants it, please get in touch. Stop broken at stambicibtc.com. But I'm coming to Stanbic for my advert money on that. Thank you so much, Titi. I truly appreciate you.
Yeah.
Have a
Thank
wonderful
you.
week ahead.
Yeah, thank you very much for having me. Thank you everyone for listening this morning. Have a great day.
You too. Thank you. Wow, that was simply educative, informative, so much to learn, so much to glean. A big thank you to Titi for that, and a big thank you to Auntie Binta for bringing Titi on. Thank you so much, everybody. And like I always say, please start. Don't just get this information, use the information to your advantage. Start now, start small, start afraid, but just start. And that's the important thing. Have your investment goal clear and decide on what you want to do. And like I would say, if you can think it, you can be it, and you can have it, because definitely you have what it takes. You are good enough, you are big enough, and together we win. Until I come your way next week, Monday, another edition of Knox. By the way, next week, Monday, by God's grace, we're talking about leverage. You don't want to miss that edition. A fine gentleman is coming up on the program to talk to us about leverage. It'll be very educative. Another fantastic time out on Knox to Nuggets. So until then, bye for now. God bless you.